Joining me now to discuss CRWD CEO Rob Luna. Rob, let me start with you. Here's the thing I always find interesting, particularly when I look at this from the perspective of someone who's not necessarily a seasoned investor. How do you square the idea of the Federal Reserve needing to derail the economy, perhaps even into a recession, being bullish, even though that means less profits for publicly traded companies?
Well, I mean, look, Charles, if you look at the technical definition of recession, we're already there, but it makes sense. I mean, the GDP, the type of growth, the monetary policy that we had to get us out of the pandemic is not sustainable long term. So, I mean, contracting from those types of numbers is really normal. And if you're a long-term investor, this is an opportunity for you to get in. You teased at the beginning of the show, try retiring without investing in equities. And if you're a young investor, these are the types of pullbacks you need to look like. They happen all the time. It's nothing to get too worried about right now. But yes, we are going into recession. We're slowing down. That's a normal part of an economic cycle, Charles.
Robert, you work with a lot of retail investors. Are they losing their zest or their zeal for this market in general?
You know, not at all, Charles. And I think, you know, to Scott's point, and we were looking at this, you know, actually just yesterday, we're using that as a contrarian indicator. Those outflows, if you look at the last few times of the ARK fund, that's really been a good time to go in and buy. And, you know, to the old Wall Street guys, look, the industry is changing. They're going to get disrupted. They're very, very worried about protecting their 1% asset management fee. They know information is becoming available to these investors. So anything they can do to delay that until these 50, 60-year-old guys can retire, they're going to try to push back on that. But the individual investor, which shows like yours, Charles, are being empowered, and they're, you know, losing more and more respect for those Wall Street guys.
Although 60 is the new 35, I'll let you know. Michael, hey, Rob, it's been a minute, my man. What are you buying?
Yeah, I mean, right here, I'm sticking with the long-term themes. And for those people who are just starting to invest right now, cybersecurity is going nowhere, Charles. CrowdStrike just reported great numbers. And like he said, this is not discretionary spending. Look at names like CrowdStrike, look at names like Palo Alto. And as I mentioned, I believe that asset management, getting beta in the market, is going to be free eventually. So if you want to pay for something, look at a company like Blackstone out there. They're adding value, paying 6%. That stock's pulled back. I like Blackstone because they're alternative exposure.
Yeah, they have exposure to everything.